What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to dive into some serious harmonic technical analysis. We also got a packed week ahead with some key economic indicators to watch. First off, we'll be looking at the Producer Price Index, better known as PPI, which comes out on Tuesday. This measures the average change in selling prices received by domestic producers for their output. This is going to give us a heads up on inflation from the producer side. Following closely on Wednesday, we also have the Consumer Price Index, the CPI, which tracks the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. This is going to be a key and critical point for understanding inflation from a consumer's perspective. Then we're going to shift our focus to retail sales, which comes out on Thursday. This report tells us how much consumers are spending at retail outlets, which is a direct indicator of consumer confidence and economic health. Also on Friday, we're going to cover building permits as well as the housing starts. So the building permits gives us a forecast into the future construction activity by indicating how many permits for new buildings have been issued. This can signal growth or contraction in the housing sector. Whereas housing starts, this counts the number of new residential construction projects that have begun. This is also going to give us an insight into the current state of the housing market. And to top it off this week, we are going to be kicking off earnings seasons, starting with big banks. Their performance can set the tone for the rest of the market, showing us how financial institutions are faring in the current economic climate. So we'll be using harmonic patterns to analyze these events, looking for trend and reversals that could potentially dictate market movements. So make sure to stick around for that part of the video because it's going to be very insightful. And if you find this kind of analysis helpful, hit that like button, drop a comment with your thoughts or questions, and don't forget to subscribe for more updates and future videos. Having said that, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. So kicking us off here first is the SPY. We do have a harmonic pattern here on the daily, this bearish ABCD pattern. One of the levels I kept watching here, very important level to hold to see if it could still hold above this level, was HOP at 584. And unfortunately this week it did finally close below HOP since all the way back here in October. So the next level here harmonically, as I bring out my drawings and the harmonic oscillators here, the next level I am looking for the SPY, if it continues to the downside, is to close that gap basically where the next harmonic target is at, ABCD there at 575.88. Below that, then you have a big retracement all the way back down anywhere between 562 to 559, and below that you do have the 200 SMA there around 556 where the 200 EMA is at. On Friday's close, it was obviously an increase in volume, so it is picking up on the sell side. So you did also cross on below the HSI midline, and the AMP RSI is approaching the extreme levels as well on that AMP RSI. If we go over here to the weekly, I want to show you guys something that was interesting. You did close on increase in volume on the weekly, and you also engulfed the previous candle off of increasing volume. So in technical analysis, that means continuation into the next weeks to come, maybe this week, who knows. We obviously have a lot of data that comes out this week, and as well as bank earnings. So we'll see if SPY here loses the 21 EMA, because I believe, just make a zoom in, yep, it's still above the 21 EMA. Below that, then you're obviously looking at where you kind of broke out of that range there around 562. So if it loses that level, that's where I'd be looking. You do have a harmonic pattern here on the weekly calling for HOP at 555, and then ABCD there at 531. There is a gap to fill towards the above T2 here on the 1 day, but we're still a little bit far away from that. I know everybody's looking here also at that head and shoulders pattern where the neckline, I would put it there where HOP is, and you did lose that level. So if this is going to actually play out, you'd be looking for a deeper retracement towards even the 560s range. So one of the things I'm going to be looking for here for support is that 580.09. That level holds, then you want to reclaim 584, get back above that, and then you're going to have a bunch of resistance all the way up here towards 594, 595, and then more resistance up here. As we could tell here, every time we come and pushed up, we did push up to 600 last week, but did not manage to close below, and we've just kept getting volume to the downside every single time we had tried to push up to the upside like we did here last week. Friday, you had a push up, and then you met with selling pressure with increase in volume, and then followed through the next day you tried to pick up some volume on the buy side, but then again, Friday, you picked up on even more volume to the downside. So right now, in my opinion, I believe you can give it to the bears here a little bit with controlling this area, but we'll see if the bulls step up here. Obviously, we're going to have to wait for that data, but the way the data has been coming out, it is kind of leaning a little bit bearish, at least in my opinion. So definitely to watch out that level 580. Below that, then ABCD there, 575, basically where the gap is at. That level is probably going to be the key level to watch out for, because if you lose that level, then you could be coming for a much deeper retracement. Some of the blue chips have been approaching their 200 EMA and SMA, so we're going to see if the indices are also there to follow. One thing to note is that from its previous all-time high there, SPY has come down now 5%, negative 5% there. So if this is going to be a correction, we're probably going to see, depends, up to interpretation, a correction could be anywhere between 10-15%, I believe. So if there's a little bit more downside, then we can have a much deeper retracement. So definitely keep a close eye out on SPY. Jumping over to the triple Qs here. So the triple Qs has a white swan. Also, you have the butterfly pattern here. One of the ones I'm going to be focusing my attention on is that bearish butterfly pattern that we currently have here on the daily. As you could tell, also tech has been selling off a bit here for the NASDAQ, and on Friday you got high volume to the downside where you closed at 507.19 here. So you did lose a 50 EMA SMA there, where it did try to hold above last week, above those levels, but unfortunately finally closed below the 50 SMA there, whereas SPY had already closed below, and the Qs now officially has closed underneath those moving averages. So what can we expect here harmonically? That butterfly pattern generated here at point D here, you obviously went to that hop level. You did lose with high increased volume here. The XA level tried to stay above a few times last week, even had an attempt to get above. Unfortunately, it failed, meeting with volume to the downside, increased volume, and any attempt back up has met the following day with increased in selling pressure. So if this looks like it's on its way for a type 1 reaction, that type 1 reaction is sufficient at T1 there, which is calling at 487.27. The HSI midline, you tried to break above it, tried to get close, but obviously right now failing to even get above that midline. So if this is going to come to the extreme oversold conditions, that could be pushing it towards T1 and maybe even a little bit lower towards that PT3 target off the white swan. So next levels to the downside, like I said, for that T1 completion is going to be 487, but before that you can rely on these harmonic patterns here that I do have a support level at 503.52, kind of close to where that CD is there. It actually found support. That's where the lows of Friday was at 503.92, where it came at the lowest point of the day. So if you lose that level, in my opinion, you could be looking towards that 501 PT1 there, and you do have an HSI dot retest line here towards where PT2 there at 491.28. Obviously below that, then you look for that completion of the type 1 reaction. Volume is increasing to the downside, so that's something to watch out for. If there's going to be more continuation, you want to see the bears continue to bring in that bearish volume. Obviously, just like the SPY, we're going to have data. We're going to have to wait on data, but tech is starting to give up some of those gains here. So if we go over here to the weekly, similar setup here off of increase in volume. You do have that bearish engulfing candle, and you do have that ABCD pattern where you can see hop was resistance there at 529.73, and you are coming down to potentially, maybe just like how the SPY is already at the 21 EMA, maybe the Qs is also approaching that level, which is around $500.56. Below that, then you have ABCD there at 498. If you lose that level, then you'll be looking at the 50 SMA down the line around 470. So one thing to note is that the tech sector right now is selling off, so we'll see if there's any more support there for the tech sector. Otherwise, you could see more downside on the triple Qs, so definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones. So the Dow Jones continues to pick up volume here, even after all this selling pressure it got here in December. It has not come up here with any buying pressure. Very little buying pressure you got here. It looks like it was just a bear flag, and now continuation to make maybe in this downwards channel to create a lower low, which it did do on Friday off of increase in selling pressure. you did cross the HSI midline. So we're going to see if there's more continuation here for the Dow Jones. The next level I am looking at would be PT3. That is a white swan target there, which is calling out 409.03. Very close, just slightly below the 200 SMA there. So the next level is the downside for the Dow Jones. The next level I have here is at 200 EMA, which is where my line is at 412.35. We can go back and scroll wide that level. As you can see here, you had a push back up here back in August, failed, came back down, finally broke above it, and then you hovered around 420 for a while until you pushed up into this range here, and then now you're back down again here, where you finally lost 420 on close below there on Friday, below that 420 target. So that's the next level I'm looking at here for the Dow, is at 412. Below that, then we're obviously looking at PT3 to complete that white swan pattern. The HSI midline, though, one thing to note, that it just barely crossed the midline. So if this goes to the extreme oversold conditions, that's probably going to be lower than the 200 SMA. So in my opinion here for the Dow Jones, very key critical level is going to be at 412.35 and then the 200 SMA. So PT3 below that, then it puts the Dow Jones in a range all the way back down between 392 and 412. Why that range? Well, if we go back here just more recently in July, right, you came up here to 412 and then failed back down, hovered around, held support in that 392 range, and then you just traded in this range. So that's the next level I am looking at here. If the Dow Jones doesn't hold support around that 412, then you might be coming to lose below that $400 range and even down to that 392. If we go over to the weekly here, the weekly, unlike SPY and the triple Qs, the Dow Jones has officially closed below the 21 EMA on the weekly, where you do have the same pattern, that ABCD pattern here on the Dow Jones, and you did lose hop. So the next level, if you're looking at here at the EMAs, SMAs, it's at 50 EMA SMA, which is right where the ABCD target there is at 407.02. Obviously losing that level, then you come down for the type 1 reaction at 350.92. This is on the weekly chart. That could take a while to play out, but we'll see if that even plays out, because on the weekly, the HSI is in the extreme oversold condition. So if it manages to catch some type of support here, you could look for that HSI arrow, which could indicate that a reversal isn't coming. But for the time being, we're not seeing that yet. You want to see the HSI arrow trigger with high volume, and even then, you could trigger it after you even lose this level here and go to that 407 target, and then maybe come back up to test hop. And if you fail that, then you obviously will be coming down for a much deeper retracement if should you fail and continue to the downside. So the Dow Jones picking up on some volume here, very close to the 200 SMA. Like I said, some of the blue chips have already tested their 200 SMA or are at the 200 SMA, and the Dow Jones compared to the triple Qs and the SPY here have not come anywhere close to the 200 SMA, but the Dow Jones is indicating that right now it's below most of the moving averages here, and the main one here that everybody's going to be looking at would be that 200 SMA and EMA. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So the Russell 2000 currently has this bearish butterfly pattern. As you could tell, hop was the level of resistance, and you came here for that type 1 reaction, and you did try to stay above that T1 here this week, but unfortunately we're not able to hold that. And now you officially came down to test the 200 EMA, and you almost touched the 200 SMA there, which is around 214.99. You got very close, but ultimately you did manage to close above the 200 EMA on Friday. So IWM has officially come here to that 200 moving average. The Dow Jones is approaching that level, and then we still got a bit of ways to go for this S&P as well as the NASDAQ. So are these two indices telling us that's where also the Qs and SPY is going? Hard to tell, but if that is the case, then we have maybe a much deeper retracement in the market. So some of the levels here to watch out for IWM. Here's a break on my drawings. I do have a gap to fill here towards 212.78, roughly where T2 is at. That would complete the full reaction at target 2, which is calling at 212.66, and obviously that would be losing the 200 SMA on the daily. What is interesting here for the Russell 2000 is that you did manage to close on Friday below that midline, that HSI midline. So if the Russell 2000 decides to go to the extreme case, the oversold region here, that is much deeper than 212 than T2. I do have a next critical level of support for the Russell 2000 here at 201.99. As we can go back here, as you could tell here, back even just in July, you came up here to that 227, failed. You came all the way down here to 201, even all the way down to 196. Found support, tried to climb back in this channel, came back down again, back up, finally broke out of it, and now you're losing that level. You could even go a little bit farther back. Why that 202 level is key. So you broke out of it here in December 2023. You failed, came back down, tried to hover around it, hovered around that 202 level again. So that is a key level that I am watching out here for the Russell, because if it doesn't hold that 200 SMA, you are looking for a much deeper retracement, and the volume right now is picking up to the downside. There is selling pressure picking up, and like I've said, just like the triple Qs and the SPY, you can see any buying pressure has met with selling pressure the next day or two off of increase in volume to the downside. On the weekly, we do have a bearish bat that did form here. So the bearish bat, you can see was XA 235. You are coming down for that T1. T1 is at 211.55, which closes that gap. I do have a white swan also at the completion here of the pattern. You did lose OPR, lost 228, and PT1 is at 239. You have PT2 at 205.58, where you do have a massive HSI dot retest line where it could get down to. So just like the Dow Jones, the IWM also lost a 21 EMA, and you did engulf that previous weekly candle. So the HSI still got room for the oversold conditions, especially the extreme oversold conditions, and that could be towards that 50 SMA on the weekly here, which is around 212.99, and below that then maybe even down to the 205 range here. So targets to the upside here that you want to reclaim on IWM here. The next level you want to reclaim here, there is a gap that left here on Friday because we did gap down. So I'm going to draw this real quick. So that gap gets filled here at 219.01. So you want to reclaim that, maybe fill the gap, and then you want to retrace towards that 222.53 for IWM to start looking bullish again. In my opinion, you at least minimum have to get above that 227.13, then you could look back again towards these targets all the way to hop. So you could tell here from the most recent swing high there to swing low, it is failing just even before the 382 there. So for this to get it bullish again, in my opinion, you need to go towards the zone, which is around between the 50 and the 618, which is around 233 and 234, and you are a bit of you're not there, and you're not anywhere close to those levels. So in my opinion, again, you minimum want to even just consider 227 to maybe see if it reaches that 50% of that 618, which is that zone that the algos would be looking to see if the momentum has shifted. But we are below it, and on increasing selling pressure, I don't see that yet. So like I said, recover maybe 222, and then we'll see if 227 is a level of resistance, because it did try to break above here on Monday and it failed. So, and that was off of increase in volume. The next day you had follow through with that shooting star. So very weak in my opinion. So definitely keep a close eye out on IWM. Jumping over to XLF here, the financial sector ETF, early in this bearish white swan pattern where OPR failed. You did hover around between OPR there at $49.01 and the CD there at $47.81. And on Friday, you picked off on selling pressure. The banks, in my opinion, are starting to look a little bit weak. You did have a massive gap ups back during November before their quarter earnings, and you continue pushing even higher. And right now, they are entering those gaps. Specifically, XLF here still has that gap to fill at 46.73. So that's the next level I'd be watching out to see if it fills that gap. Below that, then you have PT1 at 46.12, where you did on the white swan, you did complete that type 1 reaction, came towards above OPR, and ultimately now coming back to see if PT1 holds, if it continues with selling pressure like it's been getting lately. So below 46.12, then you're looking for the type 1 reaction there, the PT2 at 45.07, just where I also have another target there at 44.99, right just slightly above that 200 EMA there. But below that, the 200 SMA is at $44.50 something here. So that's the next level I'd be looking at here. As you could tell, the last time you broke above $45, you kind of hovered in that range, held support, broke down out of it, got back above, then you held support, and then you continue pushing higher. So in my opinion, if this is going to start picking up on bearish volume here, the next level macro wise would be that level there at $45 to watch out for. If you manage to find support here where the gap fills, the next level you want to reclaim again for XLF is CD there at $47.81. Get above that level and then reclaim $49, roughly where that 50 SMA is at, and then you could look for upside again. But right now you are looking a bit weak here on the financial sector. If we go over to the weekly, similar to some of the indices here, you did have bearish engulfing candle here, which closed below the which engulfed the previous candle off of increasing volume. The HSI on XLF here on the weekly, you do have this bearish crab pattern, is a bit oversold in the extreme level. So we're going to see if it finds support. You did manage to slightly or at the 21 EMA close. So we're going to see if that holds. Maybe it does come down to fill that gap and then continues pushing up, or you have more continuation to the downside where I do have that $45 target as well. Type 1 reaction for this, if it is on its way for the type 1 reaction, target 1 is calling on the weekly harmonic pattern here at $43.20 where there is another gap to fill. Below that, then you have, like I said, 41.70 where you have the HSI dot retest line around that range, and then this is calling for down the line to T2 at 38.01. Obviously, we're still too far out for us to call those targets, so targets to the upside, if you manage to go above 49, then you could be looking at previous all-time highs at 51.62 and then hop there at 54.41. One thing to note here on the financial sector, some of the banks are going to be reporting this week, so we are going to see how that's going to affect the market, because if they miss on earnings or they have lower guidance, this is definitely, in my opinion at least, we're going to see some targets to the downside. So definitely keep a close eye out on the banks this week. Jumping over to XLE here, the energy sector ETF, no current harmonic pattern on the daily. As you can tell here, back in December, we came down here almost to my support line there at 82.51 where you did get an HSI arrow to the upside, and right now you are getting some buying pressure here, but on Friday you did try to stay and close above the 200 EMA there, but ultimately failed. You do have an HSI dot retest line there around $90, and you did manage to close and fail that level there, resistance at that HSI dot retest line, and you could argue the case that this is a shooting star. So this could be potentially looking like a bear flag here for XLE. On Friday you did have increase in selling pressure, so it was high. The HSI is completely overbought, above the extreme level, so we're going to see if there is follow through for that candle that formed on Friday, right? If this is going to be that resistance level, then you'd be looking to come back down below the 21 EMA there, and then the 9 EMA below that 87.25. Then in my opinion you'd be looking for a potential double bottom right here towards that 82.75 range, and if it fails that, then you have a much deeper retracement below 82.51. If we take a fib retracement here from the most recent swing high to where you found support here lately, you did manage to stay below the 50. You tried an attempt there on Friday just slightly below the 50, but you did try here and are failing right now at that zone. So in my opinion, if this continues to fail, you will be looking, this is considered the first impulse wave here to corrective move, and we can figure out an extension to see if this is going to start a second impulse wave, meaning you would be coming down here to make a lower low, and that could be at least minimum to that 618 at 80.82, but it can go much deeper. We won't know. It can go even to the 100% retracement at 75, but it is going to have to make a lower low. If this is going to start a second impulse wave here to come back down, it will be somewhere around here minimum, but it can go all the way up to this level here where you'll be looking up for another retracement here back up to where it got a retracement towards that 50% retracement to see if there's any confluence in making lower lows and lower highs at the same level. So we're going to see if there's follow through there. Like I said, levels to the upside though, for XLE to start to get bullish again here, you want to definitely get above the 200, and specifically that HSI dot retest line, which is around 90. Above that, then you have the 200 SMA, and you reclaim the major moving averages. The 200 SMA is at 91.20, and then you have a huge HSI dot retest line at 94.76. So right now XLE, obviously a lot of geopolitical issues going on. If you go over to the weekly, you are starting to see increase in buying pressure, still relatively low, but it is increasing. So You can see it is just kind of consolidating there between 98 and trading in that range between 98 and 82, so that $10 range. So we're going to see what happens with XLE. So definitely keep a close eye on the energy sector. Jumping over to Apple here. So Apple on the daily, no current harmonic pattern. We did have this bearish dragon pattern, but this one obviously got invalidated as it closed way above OPR. But doesn't mean we can't use this for levels of support and resistances. So the next level here I'm looking at here for Apple, as I bring up my drawings, I do have a support line here that you failed this week. This held support. As you can see, there was like a tri-star pattern there at 242.22. You did manage to lose that level. You are closing below the 50 SMA now, and that is off of an increase in selling pressure. So volume did support the move down. So the next level I'm looking at here to the downside is that BC there target at the 86 of the previous dragon pattern, or at 230.75. You do have an HSI dot retest line at 230.06. So between that range, next level, if you lose that level, you'd be looking to test a 200 EMA there at 220. There is a gap to fill all the way to 217, just slightly above the 200 SMA, where the 200 SMA is at 215.56. Below this level here at 230 though, BC, key level to watch out for, because if you do lose that level, the next level I'm looking at actually would be here, 219. That's where it held support, where last time it did try to find resistance there, and maybe it was going to go look for that CD target there at 208, but ultimately held support. So that would be the next level to watch there at 219 if there is continuation, because if you lose that level, in my opinion, you might be coming down here all the way down to even PT1 at 196. The HSI did manage to get above that extreme level, but no HSI arrow reversal to the upside, which can mean that you can come back again to that extreme case here to where it got to around -8. So -8, you can come back down, and that, in my opinion, would be towards 230 again. If there is more continuation to the downside, obviously volume picks up, then you are looking to switch to different time frames to give you more a better idea of where it might be headed to, because right now the HSI on the midline is on the below the midline on the weekly. So if this even goes to the extreme conditions, that is calling for maybe even OPR again, which again goes back to that daily target, giving confluence to that PT1 there, that CD target as well. So right now, in my opinion, Apple is starting to lose some of these levels here, right? You broke out of 230 here last time, and you went up to that new all-time high. So you could be coming down to retest that breakout, and that is going to be that HSI dot retest line, basically where 230 is off of the BC target at the 86 of that dragon pattern. So key level to watch out for. Levels to the upside for Apple here. You want to reclaim 242.22 again. That's the next level you want to reclaim in order for you to get back in this range where you did find some resistance here, some chop above 248. Then you're looking for the gap to fill there at 249.43, and then you're looking again for a retest of an all-time high. But right now, I don't see that yet. Key level to watch out for is at 230. If it fails, then it could be bearish here for Apple. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft, no current harmonic pattern on the daily. It's just been tracking this bearish bat pattern that already completed both type 1 and type 2 reactions. So what can we expect here? One of the blue chips that has actually already tested a 200 SMA even prior to this dump here has been Microsoft, right? Microsoft came down here back in August, and it's just been hovering around here. You could tell back in August here, 200 EMA was support, came back up here towards that 430 range, and then it was just trading in that channel. And then ultimately, just more recently here in early December, it did get a bullish support above that 200 EMA, and it went towards that high there around 456. And right now you did fail a key level there at 433, and are now back again to that 200 EMA. You did have some selling pressure here pick up on Friday, but you still haven't closed below the 200 EMA. So lately, the 200 EMA for Microsoft has held support. We'll see if this is going to be the case again. The HSI did cross the midline on Friday. You did form that HSI arrow to the upside, but you got met with this doji candle there, long-legged doji candle, and you had some resistance at that HSI dot retest line there, which is around 434 and change. So in my opinion, that looks a little bit weak for that reversal signal. You did form the HSI dot, which is doing a check back of the previous HSI arrow and ultimately telling you that, hey, the reversal was incoming or is potentially incoming. But now on Friday said the bear said, nope, hold on, not yet. And you had that off of increasing volume pressure. So what happens here, if the 200 EMA fails to hold support on Microsoft, the next level I would be looking at would be roughly around $400 range, $399. You could even have some support there at 405 and around $400. So it has come down to 405, and then 400 has been held support. And below that, if you lose that, then you're going back down to 390, maybe even 386 for an extreme double bottom like you did here and back in August. So that's the next range I'm looking at. You have a wide range between 433 and 386. Targets to the upside, you want to reclaim 426.91. There's going to be a lot of resistance here. There's a bunch of EMAs curling down, and there's volume to support bearish case scenario with volume that stepped up. Only 2 days in the past, 2.5 weeks, where you had buying pressure, and then the selling pressure came in off of increase in volume. So in my opinion, it looks weak. You're about to get the 2050 crossover to the downside on the EMAs, so that could potentially mean more downside is incoming. On the weekly, you can rely here, no current harmonic pattern, but it is approaching that 50 SMA, or excuse me, the 50 EMA there at 412.57, where that HSI dot retest line is at. You can clearly see it better here on this time frame. Why, if it loses that level, you can come down here. When you broke out of 386, you pushed up here, you fell back down here towards that 386 again, and then you also held it back here in August. So broke out of it in January, came down, tested around April, held support, broke to all-time highs, came back down again in August, and then tried for another attempt at all-time highs, but now failing. So you could come back down here if there is more downside on Microsoft. So definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon on the daily currently has this bearish C crab. So what can we expect here harmonically? If this is actually going to start its type 1 reaction, that type 1 reaction is sufficient at target 1 to 201.91 if that is where it's suggesting it's going. But before that, we do have some levels of support. So what are those levels of support? The next level I'm going to be looking at here is 214.69. That is a key level here. The last time it came above that, it got rejected, held support above 201, and then it finally broke out where you actually gapped up. So that's the next level I'm going to be looking at, probably where that gap closes as well at 214.02, just slightly where that 50 SMA is at. So below that level, then you're looking at the second gap fill, which closes there at 208.20, where PT2 is at, and then you have obviously the continuation for the type 1 reaction down towards 201.91. So key level there at 214.69. Below that, then it puts it, in my opinion, in that range between 214 and 201, just slightly where it happened here last time, where you got rejected, came back below to 201, held support above it finally, and then it pushed up. So that's where I would have it in the range if it loses that level. So targets to the upside, you want to hold above the 50 SMA. If you hold above 50 SMA, the next level to the upside you want to reclaim would be 221, and then back above 228 to be bullish again and reach all-time highs, and then continue to the upside here. For Amazon on the weekly, you did engulf the body, not the whole wick, but it is still an engulfing candle, and it did find support above the 9 EMA. So no current harmonic target here on the weekly, just a target there at hop at 203.04 from the previous harmonic target. So key level to watch out again here is going to be that 214.89 69 range. Below that, then we might be coming for that type 1 reaction. So definitely keep a close eye on Amazon. Jumping over to Tesla here. So Tesla on the daily, you did close on Friday at 394.74. No current harmonic target here on Tesla has formed on the daily. So you did try to form a hammer candle here on Friday, but you did slightly come down off of decreasing volume. So it could be showing signs of a reversal is incoming. You did have the HSI arrow that did trigger here last week on the 3rd of January, and you tried to push up. It was decent volume to the upside, but then you came back down to that double bottom there. So what can we expect here? The next level to the downside, if this is not the reversal signal we're looking for, then you're going to come back to that 50 SMA, just basically where a bunch of these blue chips are actually headed to for level of support, and that is going to be around 365. Below that, you do have a gap to fill there at 358.10, and then more gaps to fill to the downside here as well. So we'll see if there is support here above these levels. You want to see a strong reversal here. The volume has been decreasing lately, so we're going to see if either you consolidate and you wait, or you come down for a much deeper retracement. If you go here on the weekly, we do have a bearish ABCD pattern where you are finding support above the 9 EMA here. So the next level to the downside based off of this bearish harmonic pattern, if this is going to start the type 1 reaction, target 1 is calling for 319.69, which would come back down here and fill 1, 2, 3 gaps that it has, basically where the 21 EMA is at on the weekly. And like I said, some of the blue chips are approaching their 21 EMA on the weekly, so we're going to see if Tesla does something similar to that. Volume is decreasing here on the weekly to the downside here off of bearish volume, but you did cross below that HSI midline. So if it goes to that oversold conditions, that could be towards that T1. So targets to the upside based on the harmonic pattern here on the weekly. What you want to reclaim is to get back above like 400, 435. There is a gap to fill there around on the daily here at 451.02. There is a huge HSI dot retest line there around 454 above that. 463, and then maybe you push towards 500 down the line. You could argue right now that this is also a bull flag here on Tesla. Obviously on the flag you want to have low volume, or suggesting that there is consolidation volume where you are consolidating, waiting for that breakout. So we're going to see if that is the case ultimately, depending on where you take that flag pull. If you take it from here, then you are probably approaching you're at the 382, so you don't want to lose more than 50% of that retracement, otherwise it invalidates that bull flag. So right now you're kind of fine here. Maybe it's still a bull flag. You want to have volume to support that bull flag breakout, and you need to have that off of high volume. So right now Tesla could be consolidating here between that 21 EMA here and that 50 SMA. So we're going to see if that level holds. If it doesn't, you're looking towards targets to the downside, specifically those gaps. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google on the daily closed on Friday at 192.04. So what can we expect to harmonica? You do have this bearish butterfly on the daily, and it is finding support so far above the 21 EMA. You did have good buying pressure here lately here off of increase in volume. You did try to close above the HSI midline, but then again you crossed below it and failed on Friday. So key level, in my opinion, to watch out here is that 21 EMA, which is around 190. Below that, then you have hop there at 185.60. The XA target there at 181.54, where that 50 SMA is at. Below that, then you have a gap to fill at 173.65 and a HSI dot retest line there slightly above the 200 EMA around 170. So where T1 is at 168.72. So right now, Google doesn't look half bad compared to some of the blue chips, right? It's still in its range here. It actually looks like it's in an asymmetrical triangle here. So we're going to see if it just breaks out to continue pushing higher. The volume did come here bearish on Friday with high volume, but right now it's at least looks to me like it's in a consolidation phase here between 201 and then hop there at 185. So it's in this channel here. We'll see if it finds support, because if it does, and you bounce back above 183, the next level I'm looking at would be the retest of the all-time highs there, and then to come back up to 203.78. Should you fail, then you might be looking for targets to the downside. If we go over here to the weekly, you can see that it is a shooting star rejection at hop. That is calling back again to ABCD target there, potentially at 184.44, which gives confluence to that hop level being the key level of support at 185.60. So the weekly did have increase in selling pressure here. You are hovering around the overbought conditions. You didn't get exactly up there, but you are starting to curl down, which could suggest here that you might be coming down here to test that ABCD target at 184.44. You have a bunch of wicks here. Shooting star could mean that a reversal is incoming back down. Obviously a type 1 reaction for this is all the way to target 1 at 137. Too far from those targets as of now. We're going to see if at least, like some of the blue chips, if it is approaching the 21 EMA, that is roughly around 176, where there is that gap to fill. So Google, in my opinion, doesn't look half bad to the downside yet. Nothing too concerning. We'll see if bearish volume starts to pick up on Google, because then you can start seeing towards that gap fill as a level of support. So definitely keep a close eye out on Google. Jumping over to Meta here. So Meta obviously had some news during the week with the addition of Dana White into the boards. It did push up in after hours so that towards that 636, where previous all-time high was at 638. So what can we expect here harmonically for Meta? You do have this bearish dragon pattern on Friday. You had closed with a high volume indecision candle, right? So you did close above OPR at 614.22. Friday you closed 615.86. So what can we expect here? If this is going to continue pushing volume to the upside, the next level you want to break above is 627, then a retest of 638 for the previous all-time high above that. Then you're pushing probably towards that $700 range. Targets to the downside though, the next level if you fell here would be BC there at 598.23. I do have an HSI retest on around 587. But so far the 50 SMA has held support here pretty well for Meta. Still above that range, is also above the 90 EMA. So that would be the next level to watch out for. One of the most key levels in my opinion though, it's going to be flat 741 and then CD. CD losing at that level from the dragon pattern at the 1.272 at 550. Could start its descent towards that type 1 reaction to target 1 at 495.60. You would have support obviously at the 200 EMA there around 529. You do have a few gaps to fill here, but right now it doesn't suggest, at least to me, that it wants to come back down. It's still trading in this upwards channel, just creating higher highs and higher lows. But we did get met with high volume indecision candles, some volume to price analysis when you have a long-legged, you could say doji candle here of an indecision candle, high volume could suggest that a reversal is incoming, so potentially to the downside, but not yet. We want to see follow through if that is the case. You want to see in the next few days volume start to pick up to the downside off of high volume. On the weekly, similar setup, long-legged doji candle, indecision candle, which could be signs of a reversal, still not clear. You do have a white swan here, but you're still holding above the 9 EMA, so this is kind of still a little bit bullish here. In my opinion, you could lean towards the bullish case for Meta with maybe signs of weakness that could be coming here in the next week, especially with all the data that's coming. But I don't see the bearish sentiment yet on this still. I still need to see high volume come in, because the times that you did get rejected even after the news came out was off of decreasing volume. So this candle here, hard to interpret. It is high volume, but it is high volume off of an indecision candle, so it can go either direction. So we're going to see if there's the bulls or the bears are going to step up in the next few days. So definitely keep a close eye out on Meta. Jumping over to Netflix here. So Netflix did start to pick up here on some bearish volume. You can see that there's no bullish volume coming in here on Netflix. There is no current harmonic pattern on the daily. We did have one that we were tracking on the monthly, where it did get very close to that $1,000 range. It went up as high as 941. You did form that inverted hammer candle there. You can call it a shooting star, which was telling you that maybe a reversal was coming. And right now you are forming an HSI dot on the monthly. So weekly, you do have what now is 1, 2, 3, 5 weeks in a row just selling pressure, making closing below the previous candle close. So right now it looks like the 21 EMA is the next level of support there on Netflix. You did lose my line there at 847.40. So the next level of support would be the 21 EMA at 809. On the daily, you did lose the 50 SMA, and I do have another range where this could go pretty quickly to the downside towards 765.75. As you could tell, this level here was a bit of a zone where it was just hovering around that area, and when it did close above it, you went all the way up to the new all-time high. So the same way you quickly pushed up is the same way you can possibly come back down quickly as well as the level of support with increasing volume pressure. The RSI still got room to the downside. HSI is in the extreme oversold conditions, but what this is telling me is that something more macro is taking place, and that could be the weekly HSI, which is entering the extreme levels there. So it's still got room for that extreme level case, and that could be at that 21 EMA, maybe even down to that target, like I said, that's 765. So very, very bearish volume coming in here for Netflix, with at least to me shows no signs of stopping just yet, but we're going to see if this holds support. If it holds support, you want to hold above 847.40, get back and close that gap there where you do have a gap to fill at 873. Above that, then you want to reclaim the HSI dot retest line at 894.52. If you want to get bullish and for the momentum to shift, that would be the 618, which is at $900 for Netflix. So you are below that. So until it gets above to 900, in my opinion, you have to look a little bit more bearish on Netflix. So definitely keep a close eye out on Netflix. Jumping over to NVDA here. So NVDA currently has this bearish alt bat pattern that formed at the completion of point D here on Tuesday. So obviously we had CES during the whole week, and you had some bearish volume come in where you had -6% on that day. So it was high volume, and you came down all the way to target 2 there at 136.90, and on Friday you closed at 135.91. So what can we expect here for NVIDIA? The next level I am looking at would be to see if the previous deep crab pattern come back down to 133.05. I do have a support level at 132.66. Fail that level, I'm looking at here at 127, and then all the way back down to finish that white swan where there's a huge HSI dot retest line. There's target 2 there off the deep crab at 120, and then you have the 200 SMA there at 119, roughly where that gap closes as well. Volume is slightly decreasing here, so we're going to see if this is a level of support. So 132.66 is what I'm looking at mostly here, because this is where you broke above it, failed, came back down, and then you've been trading in that range. So 132.66, if you fail that level, in my opinion, you might be coming into that range between 132 to 120, so a $12 range should you have volume pick up to the downside. If we go over here to the weekly, you do have a bearish dragon pattern that formed about a week and a half ago. That is a dragon pattern where you can see that OPR at 154.38 was level of resistance, and you are coming down here towards that BC target there at the 886 of the pattern at 135.05. So you do have an HSI dot retest line there around 132, which gives confluence to that support level at 132.66, right where the 21 EMA is at. So if you fail that level, you're looking for 120, and then you have a deep retracement down here towards that HSI dot retest line at 116, the 50 SMA there at 113, and then even worse levels to the downside off this bearish dragon pattern. I'm not sure if this is actually going to play out yet, but this is calling for some crazy levels off of NVIDIA. So more so I'm looking just more so at the 50 SMA there if it decides to come back on bearish volume, because it is off of increasing volume and you are below the HSI midline. So I'm not going to entertain these targets just yet, because NVIDIA should hold at least support there around 97. You have huge level of support there at 120 even. So until then, we won't go and entertain levels below 100 just yet. So baby steps, one step at a time. So huge level at 136, and then see if it holds 120. Targets to the upside, you want to hold support above 132.66, get above 136, and then ultimately get above 144. If you can get above 144, then you can come back to test the previous all-time high, which did form off on Tuesday. I know it was a bearish day there, -6% drop after the all-time high retest at 153, but if you can claim above that, then the next level, you're looking for the type 2 return to hop towards these targets to the upside. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here. So Bitcoin on the daily, you're still tracking this bearish crab pattern. As you can tell, the terminal bar still is holding support. You haven't really come down to test it there at 89.5K. You did get close. You went as low as 91.2K this week. So volume did step up there to the downside off of increasing selling pressure. But ultimately, you're still finding support above that terminal bar. So in my opinion, I'm not going to get bearish here unless you lose the terminal bar 89.5K, and then even so at 86.209. Below that, then you could start seeing a deeper retracement towards type 1 reaction there at 76.3K. We're slightly below the 200 EMA, but until then, that is going to be a key level of support there, that terminal bar. Targets to the upside, you definitely want to break above 95K. That 101K that we got, we did have an attempt there where it went as high as 102, and you kind of met with the tweezer top there and fell that level. So if you break above that level, then you're looking at the previous all-time high. But right now it's just consolidating here in this range between 90K and 100K there. So the HSI is curling up. It is trying to see if it's going to come to attempt that HSI midline retest, see if it breaks above it. You want to get bullish above the 50 SMA there as well, where you are holding support above the 50 EMA. On the weekly, still holding above the 9 EMA. Just consolidate. It just looks like it's consolidating in this range. See if it's trying to hold a level of support, or maybe even establishing a volume range profile. Obviously, we're going to find out soon enough. If you do lose a terminal bar, you can start leaning a little bit bearish, but until then, you are slightly leaning a little bit more bullish in my opinion. So definitely keep a close eye out on Bitcoin. So having said that, guys, that's all I have. I will be streaming tomorrow from market open to market close. If you guys are interested in watching me stream, I do stream live over on Twitch, so link to my Twitch in the description box below. I also will be having a new schedule, guys. Streaming wise, it's going to be a little tough with the baby coming in, so I will keep a Discord updated with more information on that. So I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow bright and early. Take care, everybody, and peace.